Welcome back to the garage. Tonight, the engines are hot and we're tearing this market down to the frame. We're talking Bitcoin supply squeeze, Ethereum's redline risk, and Solana holding traction like a rally car chewing gravel. We're checking the macro track where liquidity valves are wide open, but systematics are stacked like cars bumper to bumper at 200 miles an hour. We're diving into the AI supercharger, OpenAI's GPT-5 roaring onto the strip, Anthropic's endurance racers holding steady, Elon's Grok dropping drag runs, Mistral's open-source drift cars, and even Sam Altman himself warning that the AI market could be a bubble with pistons about to melt. And we're not ignoring the geopolitical pits. Trump, ZELENSKYY, and Europe just huddled at the White House like rival pit crews, deciding whether to draft or wreck. That's the ride tonight. Markets, macro, AI, geopolitics, and the garage game plan for the next 48 hours. Before we slam this into gear, smash like, hit follow, and let's rip into it. Bitcoin is holding at 115,600. That's the torque monster of the track. The big block engine with supply chains tightening like a belt before launch. Exchange reserves are falling, down 12,000 BTC in 24 hours, the lowest tank level since 2020. Miners? They're not selling. They're hoarding supply like a crew chief saving tires for the last 10 laps. ETFs poured in another 185 million. BlackRock, Fidelity, steady as a fuel truck topping off the tank. That's not speculation. That's structural demand. When reserves are low, miners aren't selling and institutions are buying. The setup is simple. Supply squeeze. It's like a drag car sitting on launch control, boost building, tires spinning, waiting for the light. Ethereum is where the rev limiter is screaming. Price at 4,273, open interest up 15%, funding rates at nosebleed levels. That's the boost gauge pinned. Too many longs in the same lane, everyone mashing gas at the same time. That never ends clean. This is how shakeouts are built. ETH could flush hard, blowing gaskets, wiping out tourists. But listen close. In this garage, we know the sequence. Shake, then bake. First the purge, then the surge. After the long squeeze, ETH has the open track to itself. Don't chase the crowd. Wait for the skid marks, then gun it when traction returns. Solana keeps playing the rally car. Price at 181, hugging curves, waiting for the next jump. Fire Dancer client progress is the upgraded suspension. It handles the corners, it soaks the bumps, it makes the whole car stick tighter. Every time Fire Dancer news drops, Solana ecosystem tokens like JUP and Ray rip higher, drafting behind the lead car. The rally team is tuned and ready. Keep that lane hot on your radar. Now look at the equity speedway. CTAs and systematics are max long, fully extended, like cars jammed nose to tail on the freeway with no room to brake. The VIX is asleep, quiet as an engine at idle, but the MOVE index, the bond market's TAC, is screaming at 100 plus. That is overspeed warning. It means complacency in stocks while bonds are flashing danger. One pothole in macro, one break tap in the bond market, and we've got 100 car pileup. And when equities crash, crypto doesn't drive alone. It eats the shrapnel. But here's the fuel injection. Liquidity is green. The reverse repo drained 50 billion. That's like opening a valve and flooding the engine with fresh octane. The dollar cooled off. The gearbox breathes easier. The Bank of Japan stayed dovish. Carry trade wide open, meaning global liquidity is flowing. That's grease in the gearbox, traction on the tires, and open straightaway. Combine that with ETFs gassing crypto, and you've got a market with the conditions to run fast. Now let's shift to AI, because AI is the lead car. NVIDIA just blew the doors off earnings, semis surged 10% after hours, and the entire tech sector drafted behind. OpenAI launched GPT-5, the turbocharged V12 of models, multimodal and faster than anything on the strip. Enterprises from banks to biotech are already wiring it into their cars. But here's the twist. Sam Altman himself said we might be in a bubble. He compared it to the dot-com boom. Investors throwing capital like nitrous bottles without checking the block strength. Valuations sky high. If the hype stalls, pistons could fly. That's why even OpenAI still falls back on GPT-4 for some use cases. The new engine is powerful, but the tune isn't perfect yet. Anthropic rolled out Claude 4. Think of it as an endurance GT racer. Not flashy, but built to run for hours at high revs without overheating. It signals its reasoning so you can see the gears turning. Transparency under the hood. Grok 4 from Elon's XAI came in like a drag car with flames shooting. Fast, bold, even dangerous, already pulling 200 million in defense contracts, wild on the strip, unpredictable but powerful. Mistral expanded its open source line with 128,000 token windows and image understanding deployable on a single GPU. That's the streetcar you can take home, a sleeper that drifts with the best, and AI isn't just models, it's applications hitting the real world. IVEX raised 60 million to chase financial fraud like radar sweeping the track for cheaters. Indian researchers built a crop disease detection model with 97% accuracy, like a pit crew spotting a crack in the tire before blowout. Dubai launched passport-free AI corridors, travelers gliding through immigration like cars flying through toll booths. Google Finance is becoming an AI dashboard where you can ask for candlesticks, moving averages, risk breakdowns, all by voice command. Datadog warns AI observability is the new telemetry. You don't just monitor uptime, you monitor hallucinations, prompt attacks, and poisoned data. That's a heads-up display for the driver so you don't crash at full speed. And now geopolitics. Today, President Trump sat down with Zelenskyy and European leaders at the White House. Rival pit crews meeting mid-race, deciding whether to wreck or draft. Security guarantees for Ukraine were put on the table. Talks of a direct Zelenskyy-Putin summit are already moving toward reality. If this deal holds, the track stays green. Oil stays steady, energy costs cool, risk assets breathe easy. If it breaks, geopolitics dumps oil on the tarmac and the convoy spins out. That's why the garage watches these summits like fuel gauges, because peace is a green flag, escalation is a yellow caution, and war is a red stoplight. So here's the garage outlook. Macro weather is clear, liquidity is flowing, AI is leading the convoy, Bitcoin supply is tightening, Ethereum is overheating but primed for purge and surge, Solana's grip is steady. Risks? Overheated ETH, leverage, and systematics crammed too long in one lane. If they break, wreckage. If they hold, this market RAP's game plan. If ETFs keep pumping over 300 million a day, stay in the draft and ride the lead car. If they flip to outflows, hit the pits, pull risk down. If ETH stays hot, don't chase. Wait for the skid, then enter on traction. Watch OKX and listing calendars because alt rotations happen where liquidity hoses open. And keep one eye on the geopolitics because that summit is the difference between clear track or slick oil. Christian, keep the ranch tight. John, finish that meeting strong. To everyone watching, smash like, hit follow, and remember, this is not financial advice. But when the straightaway opens, when the tack hits red, when the torque